Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look again on the gold market. So as on the euro currency, on the gold, the bears have taken control over the market, and the pattern that we discussed yesterday still has been formed. So we have got the bearish grabber now. Currently, the overall situation gives really small space for any bullish ideas, and actually it seems that we have to wait for the moment when the market will work out all the bearish signs that we have here in place. In particular speaking, this grabber as well. So either it has to be cancelled with the upper direction above this area, or market should take it out of these lows. It's not necessarily will be straight downward action back to the lows, but some at least wash and rinse retesting of the 32.10 area probably should happen. So on the follow time frame chart, now it seems that we're going to the pattern that we discussed yesterday. So you could see this market now is forming the catalyst triple 2 buy, but very often, since we also have here the reverse hand shortest pattern shape, take a look at market now wasn't able to complete the shoulder and drop down. Although currently you can see in general this low stands relatively close to this one, so we can't say that the harmony total is broken, and market still keeps some theoretical chances that it could just reborn and actually start upward action here by some reasons. So probably that should be some external factor, because based on the technical picture, especially with the bearish grabber on the daily chart that we have, chances that we will see this purely by technical reasons are really small. Besides, as you know, that actually everything could not stop just with this catalyst triple 2, but later the market could just migrate and actually shift to the butterfly pattern, or this extension to the 127 target. So that's actually what could happen, because on the ruins of the hand and shoulders, very often butterflies are forming. And you can see that the butterfly target here perfectly agrees with the downside XOP. CD leg here is showing some acceleration. That explains the deep retracement actually after the bounce here. So I wouldn't totally exclude the chance that we could get market right around 32.10, 32.15 area. As we said, it's also the target of the grabber as well. So market should take now out of these lows. That's what we have based on the patterns that stands in place. What we could do currently. So on the hourly chart, you could see how our hand shoulders has failed. So in fact, it even has not been formed since we haven't got any right arm. So it just dropped. So that explains why we said yesterday to not risk too much. If you still decide to trade with it, takes minor part of your position, some part of your trading lot, and place relatively tight stop. So do not use these lows for stop placement. Use it just below the right arm. So risk here was actually small. But unfortunately, this pattern has not been formed. Now market has completed a triple 2 pattern, right? So it suggests the minimum retracement somewhere to the 33.15, maybe 33.20 area. That's where it should be the pullback. For the bulls currently, I do not see a lot of things to do. Based on overall market performance, based on the situation where the market was not able to form minor bullish pattern here, that actually shows that the potential bullish setup that we have based on this minor pattern, based on this larger pattern, now is falling apart. Because these guys, don't forget this right arm. So here's the bull should control the market, but market definitely shows inability to do this. Correspondingly, it's significantly increased chance of the breakout. So speaking about the bullish positions in the current situation, I wouldn't take it. So I prefer to wait and see what will happen, because market was not able to pass the test that we discussed yesterday. For the bearish trading, theoretically, we could try to ride on a daily grabber that we have, but preferably if you will take position somewhere closer to the invalidation point. So this top of the grabber, that will be your invalidation point. Since we have the catalyst triple 2, it makes sense to wait for a bounce. So you could take the position well, closer to invalidation point, just to decrease your potential risk. Besides, market right now stands as support. So this is 32.90 and also a BCD target of the 222 pattern. From that standpoint of view, it makes sense to wait just for some bounce before position taking. That in two words what we have on the gold.